Hey, Szetela Agency and Farm Bureau Insurance. Again, I'm making a series of videos to sort of explain insurance basics for people that are trying to get into insurance or maybe just want to get a little bit better understanding of their coverage. So the first video I'm going to be making here is going to be on collision. Okay, this is something that most people generally understand, but there are a few different types of collision, and this is going to be sort of an explanation of what I typically recommend to people and why, and a way for somebody to save 10, 15, 20 bucks on their insurance without really losing any coverage. Okay, and I'll get to that in a second. So the first kind of collision is something that most people don't have a whole lot of knowledge about, but it is something that every now and then makes sense. So this is called a limited collision. I typically explain this as liability plus or PLPD plus, property liability or personal liability property damage plus. Okay, what limited collision does is it treats your auto policy like you have regular collision in the event that you're not at fault for an accident. Okay, if you're at fault for an accident, it treats your policy like you just have liability. So this is for people that are driving a little bit older cars. They don't want full coverage anymore, but they're kind of uneasy about the fact that they won't have any coverage on their car at all. So usually the savings from going from a regular collision to a limited collision is pretty drastic. So this is when your car is only worth maybe a few $1,000s and it's going to save you $50 a month to take off regular collision and go to limited. That's when it makes sense. And really, at the end of the day, it's all about what people are comfortable with. So limited collision, it's liability if you're at fault. It's regular collision if you're not at fault. Okay, regular collision. Regular collision, I think, is the best form of collision from a cost standpoint as well as a coverage standpoint. So how that works is if you're not at fault, you can get a recouped deductible from the other party. This is in Michigan where there's no fault. Okay, other states are different. But essentially, the way regular collision works is another person is at fault for the accident. I'm not at fault. I pay my deductible, and then I file a claim through their insurance to get that deductible sent back to me and reimbursed. Okay, so I'm really not out any money. It's just the course of wait maybe an extra week to get that back or to send them an estimate and get that money back before I even pay my deductible. So these are a couple of different options. The reason why this is a good option to have is that it's usually much less expensive than broad form collision, and if you have multiple cars, the break-even point is pretty good. So if you have an at-fault accident, you're paying your deductible anyway. If it's not at fault, you can recoup the deductible from the other insurance, and you're golden. Okay, the only time that there's a downside to that is the other party doesn't have insurance, or it's like a hit and run. So they hit your car in a parking lot, they don't leave a note, they just take off. Okay, not a very common thing. It does happen, but in my opinion, not enough to warrant the extra cost to go into broad form collision. Broad form collision. All right, broad form collision is by far the easiest to explain. It's the easiest to sell because it's very simple. You weren't at fault, we waive your deductible, and basically they go after the other insurance company for that money back. Okay. The reason why I don't think that's beneficial is it acts the same in about 90% of scenarios as regular collision, essentially. The only difference being you go after the other insurance company to get your deductible back, or your insurance company goes and gets it. The reason why it's not worth it is because if you pay an extra $10 to $15 to $20 a month to have broad form on your car or cars, the amount that you're paying each year to have that coverage is essentially more than the frequency and the money that you will have to pay out of pocket in a deductible in the event that something happens where broad form would have benefited you versus regular. So your car gets in that parking lot and you have a $500 deductible with regular. Okay, they take off, you pay $500. If you're paying $200 or $20 extra a month on one or two cars to go to broad form, your car gets hit in that parking lot, you don't have to pay the $500, but let's say for the past 5 years you've been paying for an extra $20 to $30 a month. Well, that's an extra $250 a year. times 5 years. I'm not a mathematician, but it's a lot more than $500. Okay, you essentially have a 2-year break-even point. If you're not getting in, a hit-and-run accident every 2 years, you're paying too much. So that's why I don't recommend broad form. I think it's a waste of money. I think the premium dollars can be spent much better on your policy, and the rest can be just kept as savings. But that's limited, regular, and broad. If you have any questions, leave them in the comments. Subscribe if you'd like to follow more videos. And again, this is Jake Szetela with Jake Szetela Agency. Thank you for watching. Hopefully that helps.